Itochu's management does not explicitly state a single intrinsic value number for the stock, but they clearly tie their strategy to sustainable enhancement of corporate value, which is essentially their definition of intrinsic value in Buffett-style terms. What management says about value management's core view is that corporate value equals earnings growth plus shareholder returns plus capital efficiency, and they express this through a corporate value calculation formula in their integrated report. They aim to grow earnings with CAGR 10%, FYE 2011 to 2025 13%. Achieve ROE greater than or equal to 15%, target for FYE 2026. Maintain total payout ratio greater than or equal to 40%, now 40% plus target, recently 64% in 2026. This is their internal framework for building intrinsic value over time. Management's view on cost of capital and valuation. Management explicitly addresses capital cost-conscious management. They estimate their cost of capital at 8%. They acknowledge the market demands higher returns than that. They target ROE greater than or equal to 15% to meet market expectations and sustain corporate value growth. This shows they're thinking about value creation in economic profit terms. ROE, cost of capital, which is exactly how Buffett evaluates intrinsic value. How they communicate value to investors. Management emphasizes dialogue with shareholders to understand their perspective on corporate value, and they use investor meetings, roadshows, and briefings to explain their strategies and financial policies. They reflect investor input in management strategies and capital allocation. They also disclose extensive IR materials, financial statements, presentation materials, segment briefings, governance documents, so investors can independently assess intrinsic value. Buffett-style interpretation. From a Buffett lens, Itochu's management is essentially saying, we don't give a single intrinsic value number, but we're building it through high ROE, earnings growth, and strong payouts. We're conscious that the market expects us to earn more than our 8% cost of capital, so we target 15% ROE.